So guys, this lesson is being recorded, right? And you most probably gonna find it on YouTube if you want to come back to refer to the work we're covering now, right? So the questions that were asked was for me to go through the statement of profit or loss, right? Because someone said they don't understand it. So let me just do this, right? So I'm not sure if you guys can see, but you should be able to see, right? The statement of profit or loss is as follows, guys. We have what we call revenue, right? And revenue is money that which we get from selling our goods, right? So our trading inventory. So if we're in the business of selling shoes, whenever we have a sale of shoes, that is what we're going to call revenue. Then we have what we call cost of sales, right? Cost of sales is the cost of the goods that which we sold. For example, if we sell shoes for 100 rand, but the cost of those shoes were 50 rand, it means that the cost of sales was 50 rand and our then gross profit will be 50 rand. Why? Because gross profit is revenue minus cost of sales to give us gross profit. Do we understand that so far? Let me just come back here. Is everyone okay with that? Okay. So now, if we understand our gross profit, we have what we call other operating income, right? Other operating income is other income that the business may have that does not come from our revenue. For example, it might be a service fee, it might be fee income for whatever work we did that's not relating to the main source of business revenue. All right. Usually, it's going to be 0 in the test. However, in our trial balance, we should see if there's something that's leaning more towards our other operating income. Then after that, we have distribution, administrative, and other expenses, which is this, right? This part. Here, guys, is where we're going to write our calculations for all types of expenses we may have as a business. So this would refer to our depreciation, our advertising, our insurance, our salaries and wages, our employee benefits expense, and our marketing, our electricity if we have any, right? Those are where all our expenses are going to fall under. And once we have that amount, we're going to add all of those expenses and then write them down here, right? Are you guys following? Okay, let me see if there's someone that likes to join. Welcome, Ntako. I hope that you are well, right? So, as I was saying, right, we're going to then have what? We're then going to have our gross profit, right, minus our other gross profit minus distribution, administrative, and other operating expenses to get our operating profit. What's important for us to understand, guys, that when we're dealing with the statement of profit or loss, our incomes are out of bracket and then our expenses are in brackets. Why? Because brackets indicate that we are deducting something. All right? Brackets indicate that we are minusing. All right, guys? So once we've done our operating profit, we then have income and expenses from subsidiary. A subsidiary, guys, is a business that is controlled by another business. For example, WhatsApp, Instagram, and Facebook are owned by Meta. So if we were preparing financial statements for Meta and WhatsApp paid Meta or WhatsApp had expenses, we would record those expenses from or under income and expenses from subsidiary if we are creating or presenting financial statements for Meta itself. So if WhatsApp had expenses or incomes, we would have them here. Are you guys following? Is that fine, guys? Are we all on the same page? Okay, that's good, right? So if we all understand that part, then it means that we come down to our next line item, which says income and expenses from other financial investments. So income and expenses from other financial investments usually refers to our interest income, right? So interest income, if we have interest income, be it from our bank, be it from our financial investments like our 32-day deposit or fixed deposits, if we have any income and expenses, right, from those financial investments, we're gonna add them here. Then we have income and expenses from investment property. Investment property is property that which we own as a business, right? And usually the amount that's here is going to be rent income. Why? Rent income is money that which we receive from a person that is leasing out our property. So we own the building and then we are leasing it out to another person, or we are renting it out to another person. That person pays us rent, and that rent income, we account for it under income and expenses from subsidiary. Then, after we did all of that, we're going to have profit before financing and income taxes. How do we get to this amount? It's going to be our operating profit plus all of these incomes that which we calculated here. And then we get our profit before financing and income taxes. Are we still on the same page, guys? Is everyone fine? If you guys have a question, you're more than welcome to unmute or just chat here in the chat box and ask a question. All right. Okay. Then after we have that, we're going to have our interest expense. Our interest expense falls under our financing expenses, right? So we're gonna have its own line item here, interest expense. Once you have that interest expense, we're gonna be left with profit before income taxes. How do we get to profit before income taxes? It's our profit before financing and income taxes minus income expenses, right? Income expenses is in brackets because we are deducting it from whatever we have here. Then we're going to have profit before income taxes. Then we have income tax expense. Income tax expense is basically the tax you pay based on your income. And then once you deduct that, we are then going to be left with our profit for the year. All right, guys. So that is basically the format of the statement of financial position. So if you understand this statement, it's going to be very easy for you guys then to now do journal entries and add and subtract when necessary, when we have what we call additional information, or when we have other transactions that which we need to factor. All right, guys. Is everyone fine with that? Okay. So now, I'm not sure about the other question that was asked because I can't see them again. Can just someone retype what they asked? Because I think Mandisa also asked something about the statement of financial position. I'm not sure. Can you guys just ask your question again because I can't see it anymore? If you guys have a question, you're more than welcome to ask. Ne? It can be based on the work you guys have already also covered in class. Okay. On the statement of profit or loss, under other operating income, which amount do we put there? Should I calculate it or we given? Usually for this amount, it's usually 0 in the test. But if it's not 0, it's usually amounts like fee income or services rendered income. It's usually a bizarre, malicious like account given, or usually in the test it's either going to be 0, but it's not gonna be your rent income because your rent income falls under income and expenses from investment subsidiary. It can't be your management fee income because that usually falls under income and expenses from your subsidiary. So usually for Other operating income, it's either zero or it's gonna be something like fee income or service fee income, something along those lines. All right. Okay. Is there anyone else with the question? So far, so good. Are you guys on the same page with me? Okay. What other questions do you guys have? Would you guys like us to go through an example? If yes, which one? You're more than welcome to ask, guys, whatever you're struggling with. And also, there are YouTube videos on YouTube. I'll send you guys the link. You can just private message me, né? I'll send you guys the links. They are uploaded on YouTube for you guys to also be able to see what we're doing. On the accounting equation, when we have a transaction whereby someone buys goods for 10,000 but only pays 7,000 and promises to pay the rest later, and you are told what the cost of the goods is 5,000, how do you represent this in the accounting equation? Okay, let me just come here, right, and show you how to do that. So accounting equation is, let's say this. I wanna add something. Yes. Add column after. Add column after. Assets equals owners' equities plus liabilities. Okay, it's fine. So now we are given this transaction. Someone buys goods, right? Are they buying? Okay, it's fine. You already told me. So what are we gonna do? We are going to come here, ne? So we're gonna say assets, right? Owners, equity, and then liability. So what are we gonna have for our assets? We are told that we sold the goods for 10,000, but they only pay 7,000 now. So if they pay 7,000 now, we're going to say plus 7,000 bank, right? Because our bank account is increasing by 7,000, right? Then we're gonna say plus, plus 3,000, right? And this is a trade receivable, right? 3,000, right? Then we're gonna say plus 10,000 here. Why? This is gonna be revenue. Our owner's equity is increasing, revenue, right? And then for our cost of sales now, what are we gonna say? We're gonna say minus 5,000 trade inventory, because our inventory is being sold by 5,000 again. That's the cost of it, right? And then minus 5,000 here, and then we're gonna come, right, cost of sales. So this is how we'd account for it. So let me explain. It's 7,000 bank because that's how much we're receiving in our bank account, plus 3,000 trade receivable because that's how much they are going to pay us. So the person owes us money. These are assets. Plus 10,000 revenue because it's money that which we need to record. Even though we haven't received that full 10,000, we know that it's going to come eventually. Then for our cost of sales, we're going to say minus 5,000 trade inventory. It's an asset that's decreasing. And then minus 5,000 cost of sales because cost of sales decreases our equity. Are you following, Gugu? Yes. So that's a good question. That's a really good question. That's a really good question. So thank you so much, Gugu, for asking that question. Is there anyone else perhaps with a question? So basically what we just did now was an example of accounting equation, right? So it's important to know your format for accounting equation. We have assets equals owner's equities plus liabilities. This is the accounting equation. Assets equals owner's equities plus liabilities. What does this mean? This means that what happens on the left must always be equal to what happens on the right. For example, can you see here that for this transaction we have plus 7,000 and plus 3,000, which gives us 10,000, is equals to owner's equity of 10,000. Then we have minus 5,000 of trade inventory equals minus 5,000 of cost of sales. What happens on the left hand side must happen on the right hand side. Assets must equal owner's equities plus liability. Are you guys following? Exactly. So that's good, guys. As long as you guys are understanding what's going on, right? Is there perhaps anyone else with a question? You're more than welcome to ask, guys. More than welcome to ask, guys. Is there anyone with a question? You can ask anything based on accounting equation, lecture example 1, lecture example 2, exactly whatever you don't understand, you're more than welcome to ask. How guys? Are you guys shy? I promise, guys, I don't bite. I can't bite you guys. It's via Google Meet. I can't bite Shem. Even if I wanted to, Shem, I can't. I can't bite you guys. So you just ask your questions, guys. What do you guys think you're struggling with? How? So it means for your test 1, you guys are getting 100%, most. Yippee. Hey, congratulations, guys, in advance. Most you guys are ready. You guys are dangerous. This group of students. It's a dangerous group, this one. 100% from everyone. It's personal now. It's personal. Or what do you guys prefer to do? Do you guys prefer to watch pre-recorded lessons that are going to be sent on WhatsApp? Okay, there's another question. Please explain equity and liability section of the financial position. Okay, so when we refer to equity, right, we are referring to, when we're referring to equity, we're referring to ordinary share capital and retained earnings. So usually we calculate these amounts when doing the statement of changes in equity, right? Ordinary share capital, we're looking for the balance at the end of the year. Likewise with our retained earnings, right? And these are calculated when we do the statement of changes in equity. I'm not looking for this specific format. There's another one. I think it's below here. Where basically we're looking at the balances at the beginning of the year plus any additions minus, to give us what we have at the end of the year. And then for our retained earnings, what affects our retained earnings? What affects our retained earnings is the balance at the beginning plus profits minus dividends, basically, right? So that's what affects our retained earnings. All right, guys. Is everyone okay with that? Fine. Then when it comes to the statement of financial position, we have what we call non-current liabilities and current liabilities. Non-current liabilities are liabilities that which need to be repaid for more than 12 months. Ne? So it's more than 12 months. More than 12 months. Example, mortgage bond. Ne? Mortgage bond, vehicle loan, right? Mortgage bond, vehicle loan, and etc. Right? These need to be repaid in more than 12 months. Then we have current liabilities. Current liabilities refers to trade and other payables. It refers to current portion of long-term borrowing. It refers to current portion of lease liability. Oh, also here, another non-current example would be lease liability if it's more than 12 months, right? What do we mean for current liabilities when we say current portion of a long-term borrowing? Guys, if they tell us that we took out a loan, let's use small figures. They tell us we took out a loan of how much? 1 million at 10%, ne? And it is for 5 years and will be repaid in equal installments. It means that this means that 10% of 1 million is 100,000, right? Yeah, it's 100,000. So if they tell us that we need to pay 1 million plus 100,000 in equal installments, right? We're going to just then say 1,100,000 divided by 5, and this is going to give us how much we need to pay. This is gonna be how much? It's gonna be 220,000. So our loan itself, right? Our loan itself here will be that million, right? But our current portion, the one that which we need to pay for this year, for example, will be the 220, because the other 220s will be paid in year 2, year 3, year 4, and year 5. Are you guys following there? So are you guys able to differentiate between current and non-current? Yes, Mandiso. I see Mandiso's clapping her hands. So I think it's, that thing when you are black as a person and then you have that moment. I think that's what Mandiso had now. She's like, oh, yes. You see, that's what happens. Alright? So I hope that you are okay, Gugu. Okay. I heard the lecture talk about income and expense from subsidiary. So actually, I heard that subsidiaries are other organizations that are owned by our organization. So I want to ask, does it make our statement of profit or loss a consolidated? How do you know consolidated financial statements, Tabangule? So usually for accounting 1A level, you guys don't make consolidated financial statements, because that's when we enter now into accounting 2B and accounting 3B, which way we're dealing with groups. Now we don't deal with groups in detail for you guys, right? So if there's anything that is subsidiary based, it's usually going to be given. Do you understand? We're not making consolidated financial statements because consolidated financial statements require much more understanding. Do you understand, Tabang? Right. So for accounting 1A level, it's purely basic subsidiaries where the information is given. We're not doing any consolidated financial statements. Yeah. And I also wanted to ask Tabang, where did you hear about consolidated financial statements? That's yeah. Eh.
I heard it from the lecture talking about it.
Oh, okay. Yeah, but usually with group statements or with group accounting, consolidated financial statements we do in accounting 2B and accounting 3B. So for now, we're not making any consolidated financial statements because we're looking solely at the parent.
Oh, now
Yeah.
it makes sense.
Okay, not a problem, Taba. Right? Is there any more question, guys? You guys are more than welcome to engage. Can see people are speaking now. They even unmuting their mics. Yeah, guys, no one is biting anyone. We are all here to learn from each other. All right. But so far so good. Do you guys understand the work you guys are actually covering in class with your lectures? Like, do you understand your lecture slides? Do you understand your tutorial questions? Do you understand conceptual framework? Are we all on the same page there? We understand a little bit. Okay, exactly what is it that you think you don't understand, Tabang? So that we clarify it here as well.
Oh, okay. First, when we were introduced to this module, we were told about the transactions and events. So I kind of get lost when we talk about transactions, events, assets. We need to identify if it's an asset, liability, or equity, where sometimes there are definitions of an asset, but I kind of don't understand them like quietly, because I think the first definition is the present economic resource. Then this one they say is and it's controlled by the company as a past event. So like I want to get a clarification on what is the meaning of this definition, like what are they actually meaning?
Okay, not a problem. That's a good question. Ne? So let us just come here. Ne? First, you asked what is the difference between a transaction and event, right? The difference between a transaction and an event, guys, is that a transaction, right, usually takes place between two or more entities, right? Example, Tabang buys shoes from Lebogang for 5,000. This is a transaction. An event would be Lebogang's shoes, which is her inventory, right? Lebogang's inventory got burned during a fire. This is an event. Why? Because it's happening to one entity and no other entity is affected, right? So a transaction refers to two entities are involved, and then an event refers to one. Are we on the same page there?
Yeah.
Fine. Then you asked about the definitions, right? Definitions of the five elements, right? You guys covered this in class, I think, right? Okay, let me see if there's someone that needs to join. Okay, no one. Okay. Welcome to those that are joining. Right. So definition of an asset, right? According to your slides, right? A definition of an asset is a present economic resource controlled by the entity as a result of a past event. Right? Then we can
Yes.
yes. Then we can even go as far as saying that a economic an economic an economic resource is something that has economic benefits to the entity, for example. And then now we need to explain exactly what it means, right? When we talk about an asset, guys, it's a present economic resource that is controlled by the entity. For us to have an asset, it needs to be controlled by us, it needs to be owned by us. Be it we bought it, be it because we have a title deed, be it because we have the registration number, be it because whatever. It needs to be ours and it needs to be controlled by the entity as a result of a past event. So the past event would be, of course, us buying it or us it being in our name and stuff like that, right? An asset also needs to be something that can have economic benefits to the entity. So in this context, an an asset is something that's going to be able to bring us money, right? And is going to increase our owner's equity. For example, uh, trading inventory. Trading inventory is an asset because we are going to be able to sell that asset in return for economic benefits, which is money, which will then in turn increase our owner's equity because we will have more money. And we're going to own our inventory because it's ours and we are able to do whatever we want to do. And we are also able to prevent other people from using the inventory. For example, you own your phone, right? Your phone in this context, let's just try call it an asset. Why? You control it. And by control, how do you control it? You are able to dictate how you use your phone. You can choose if you want to use it for WhatsApp, you can choose if you want to use it for Instagram, you can choose if you want to use it for calls, you can choose if you want to use it to cheat on your partners. You choose what to use your phone for. You understand? You choose. And then you are also able to prevent others from using it. For example, if you know that you are cheating on your partner, you are able to prevent her or him from accessing that phone because you know your real life. Do you understand? So for it to be an asset, you need to be able to control it. Are we on the same page, guys? So if you're able to control it and it has economic benefits to the entity, then it's an asset. Do you understand? So that's how you would apply it then in a test, because in the test they need you to know the definition and also they need you to know the application, right? And then we also have the liability, right? A liability is a present obligation to transfer economic benefits as a result of past events. What do we mean? An obligation is something that which technically you cannot avoid, right? It's very difficult for you to avoid and you need to do, right? So let's say you take out a loan, right? Example, you take out a loan of 100,000 from Netbank. Oh yeah, Netbank, right? It's an example. You are obligated to pay back the loan with interest from Netbank, because when Netbank is borrowing you, they're not borrowing you from a perspective of a friend. Angir, it's a loan that which you are going to have to pay back, so it's an obligation. And failure to pay for this loan back has consequences, hence why it's an obligation. So even when writing your definition, you need to state that no, not definition, your application. You need to state that it's an obligation because failure to pay has consequences and it's technically unavoidable. and you need to transfer economic benefits, right? The economic benefits would be the 100,000 and the interest itself as a result of the past events, which would have been you signing your documents and contracts and so forth, right? Fine. Now, this is a liability. But now, if Jabulani borrows money from Tembi and doesn't pay, it is not a loan, right? If Jabulani and Tembi are friends, ne guys, and there's nothing signed, and they're like, yo, Chomi, hey, today I want to go drink, Shem. Please borrow me money. Ne? Then Jabulani doesn't pay when it's time to pay back. You can't say now this is a loan because there was no obligation. There was no present obligation. Do you understand? However, if they sign the contract here, you understand? If they sign the contract and there was an obligation, then it becomes a liability. So for something to be a liability, it needs to be an obligation, which means that it needs to be technically unavoidable or have consequences when not dealt with. Right? Then, likewise with your definition of your income, expenses, and equity. With equity, definition of your equity is basically assets minus liabilities. To keep it simple, this is the definition of your equity. In your textbooks or in your slides, they talk about the difference in residual interest and whatnot, right? To make it easy for yourself, you can just easily say assets or assets minus liability. Then your definition of an income, right? And your definition of your expenses are opposites, right? They are opposites. Do you guys know the definition of your income? Anyone? Does anyone know the definition? Yeah, you can say it.
I think I can. If I recall, I think it's an increase in an asset or a decrease in a liability.
That result?
Yeah, I just.
Guys, can someone please help? It's an increase in asset or a decrease in liabilities that result? That result in what?
We are talking about expenses or income.
Income, Karab, income.
Yeah, that result in an increase in equity.
That result in an increase in equity other than those
contributed by the shareholder.
Contributed by shareholders. Exactly, right? And then for our expenses, it's going to be the opposite. It's going to be a decrease in asset or an increase in liabilities that result in a decrease in equity other than those contributed by shareholders. When they're talking about things that are contributed by shareholders, they're talking about capital, contributions, and drawings. So we are not referring to these things, guys, when referring to income and expenses. Ne? We are not referring to these. Right? So those are basically your definitions, and you also need to be able to understand the application. Right? Are we all on the same page there? For those that are interested, ne, can you actually just text me hi on WhatsApp so that I can send you the YouTube link, ne? So that I can send you the YouTube link where we actually deal with an activity that talks about the definition and application, and we actually go into detail, because those videos are like 1 hour, 1 hour 30 minutes, and 2 hours for those that really want to just have a greater understanding. So you can just text hi on WhatsApp. You understand? You can just text now actually on WhatsApp, so then I can send you the link privately as well. Are we going to have adjustments on Are we going to have adjustments for bad debts on the statement of profit or loss? And if yes, where do we record them? Yes, Gugu, we are going to have adjustments or bad debts adjustments, right? And then we're going to account for them thereby administration, distribution, and other expenses. Here, this is where we're gonna put them. Here, our bad debts expenses are gonna fall under this. Our distribution, administration, and other expenses and other operating expenses. You see here where there's this bracket, that's where we're gonna put all of our expenses. Ne Gugu? Yeah. Is there anyone else perhaps with a question? Guys, are we all good? Okay, that's good. Is there anyone else perhaps with a question? You're more than welcome to unmute your mic. Tabang, Gugu, anyone. If you guys have a question, you're more than welcome so that we engage. If you guys want us to do a specific transactions as well, you can also ask so that we do it. Ne? For those that don't know which number to text, guys, it's 072 060 2586. Ne? That's the number on WhatsApp. You can just text. Just say hi so that I know that I need to send you the link. You said yes, please, Tabang. What are you saying yes, please, to Tabang? So that I understand.
I heard you saying maybe we can do some transactions.
Oh, do you want us to do some transactions of accounting equation?
Yeah.
Okay.
Please.
Would you guys all like us to do a few transactions on accounting equations? Just give me a thumbs up. Okay. Let me do this. Let me do this. Okay. Can you guys see my screen? Can just someone unmute and just say yes?
Yes.
Okay. So imagine you and your friend Jordan. Lol, here I think they talk about Michael Jordan, but yeah, are starting a company that sells cool sneakers. You decide to name it sneakers.com. Okay, wait. I think there's someone. Is that someone wanting to join or please do statement of changes in equity. I'll get that. I'll get to that. Let me just do a few here. Yeah. You have a friend called Jordan, I get. You're excited, but you still need funding. You plan to buy the sneakers and resell them at a profit. At this point, none of you have money to buy sneakers to get the business up and running. Mr. Nike, Jordan's uncle, is willing to give you 1,000 and he does not want you to pay him back. Instead, he wants ownership or shares in your company. You and Jordan agree to this. You discover that you can also get a micro loan from Capitec for 2,000. Around Randburg, there's a company called Teki that sells these sneakers, and they'll be your supplier. Teki agreed to sell your sneakers for you at 400 per pair. Teki agreed that you can take the sneakers on credit, meaning that you can take them now and pay them later at a later stage. You and Jordan decide to sell the sneakers at 750 per share, meaning you'll make 350 profit per one sneaker. There is a guy named Focalistic who is an influencer on TikTok and Instagram and is willing to market the sneakers for you. His company charges you a fee of 600 for marketing and advertising. You and Jordan decide to use his services so that you can get the word out there about your sneakers and make serious money. Since you are both busy, you decide to employ Jordan's cousin, Miss Cooper, on a temporary basis to sell the sneakers for you. You open the WhatsApp business account and Miss Cooper will use WhatsApp to take orders and sell sneakers to customers. You decide to pay Miss Cooper $350 in wages. Fine. Transactions. You and Jordan opened an account called sneakers.com through Companies Act on the 10th, and you also opened a business bank account. Okay, fine. Mr. Nike deposited 1,000 into the business account on the 10th per the agreement. So now, if that's the case, we have 1,000 as capital contributions. So how are we going to account for that? When we're doing our accounting equation, we're gonna come here, guys, right? So I'll just do it here, ne? Yeah. I still want you guys to remember that it's assets, liabilities, and stuff, ne? Sorry, let me just do this. Right, so here we have our assets, here it's owner's equity, here's liabilities. So they tell us that Mr. Nike deposited 10,000. So we're gonna say, it's 1,000. So it's gonna be 1,000 bank, and then we're going to say plus 1,000 capital contribution. Are we all on the same page there? 1,000 bank account because that was how much was deposited, and then 1,000 owner's equity because that's our capital contribution. Do we understand there? Okay. So now that we understand that, we can then come back, ne? Capitec approved a micro loan and deposited 2,000 into the business account. Okay. What are we gonna do here? We're gonna come under our assets and we're gonna say plus 2,000 bank because 2,000 is deposited into our bank account, and then plus 2,000 Capitec loan because it's a liability, right? You need to pay it back. It's a liability. 2,000. All good? Can you see that this thing is not bad, guys? Or am I moving too fast for you guys? Let me know if I'm moving too fast, ne? We can then move on. Sneakers bought 10 pairs. Sneakers.com bought 10 pairs on credit amounting to 4,000. The sneakers were delivered. You will pay after 30 days. Okay. So we bought sneakers for 4,000. What are we gonna do? We're gonna come here and we're gonna say plus 4,000 trading inventory because these are for the sneakers. Then we come to our liabilities and we say plus 4,000. Then we're gonna say trade. We're gonna say payable taking, right? Because we need to pay this person 4,000 because we owe them, so it's a liability. Are we on the same page? Okay, that's good. Then we can move on. We come to number 5, if I'm not mistaken. On the 14th, we paid Focalistic 600 for him to market our sneakers. So now we're gonna come here and we're gonna say minus 600 bank because we paid him. So money is coming out of our bank account. Our asset is decreasing. And then we're gonna say minus 600 marketing expense or advertising expense because the expense itself is advertising, right? and it's in bracket, it's minus owner's equities because it's an expense, and expenses reduce our owner's equity. Are we on the same page? Okay. Then we can move on, right? Where do we move on to? Number 6, I think. Miss Cooper sold 4 pairs of sneakers to Lebo for $750 each pair. Lebo paid a total of $3,000 in cash and took the sneakers the same day. So now we sold shoes. Ne? How much? For 3,000. Right? So what are we gonna do? We're gonna say plus 3,000 bank. Right? Because money came into our bank account, plus 3,000 revenue. Right? Then we need to calculate, guys, our cost of sales. Remember, they told us that our cost of the sneakers is 400. It's 400 rands, right? So if the cost is 400 rands, how many sneakers did we sell, guys? We sold 4, so it's gonna be 400 times 4, which is how much? 400, 800, 1.2, 1.6. So it means that our cost of sales, guys, is going to be 1.6, right? So we're gonna come here and say assets, it's gonna be minus 1.6 for trade inventories, because we have less stock now that we have sold. And then we come here and write minus 1.6, which is gonna be for what? This is going to be for cost of sales, because it's an expense and expenses decrease owner's equity. So whenever we sell anything, it's important to know that we have 4 accounts that are affected. It's either bank or receivable, and then we have revenue, we have trade inventory, and we have cost of sales. Please, please, please remember that. All right. Are we all on the same page, guys? Or did I go too fast? Is someone confused? Is there anything you'd like me to repeat? Okay, we can continue now. Number 7, on the 17th, Miss Cooper was paid $350 in salaries or as wages for selling sneakers. So we paid salaries, or we paid wages, ne? We're gonna come here and write 350. How much does she earn? 350 or 300? Yeah, 350. It's a SASA grant, guys. It's money. So it's going to be 350. It's gonna be what? Bank, because money is coming out of our bank account to pay Miss Cooper. Then minus 350 wages. We can just say wages. Wages are an expense, and expenses decrease on the owner's equity, right? And then lastly, they say that sneakers distributed 200 to Mr. Mike as a shareholder to reward him for his investment. We're gonna come here and we're gonna write minus 200, right? Minus 200 bank, because money is coming out of our bank account as the business, and then it's going to be minus 200 dividends, right? Because we are paying our shareholder money for investing in the business, and dividends decrease owner's equity. Are you guys seeing what I'm doing, guys? Are you seeing the vision? Exactly. And basically that is how you do your accounting equation. Can you see how simple it is, guys? Here, guys, can you guys see how simple it is, man? Right. Please do statement of changes in equity. So usually for now, what I need you guys to master for statement of changes in equity would be the following. be something like this. Yeah. Can you please send the document in the group so that we can try go through it again? Not a problem, I'll do that. So usually what I recommend for you guys here is that we know our ordinary share capital, our retained earnings, and our totals. And then here we're gonna have what we call, okay, we're gonna have balance at beginning or beginning of the year. Then here we're gonna have changes during the year, ne? And then we're gonna have dividends, and then we're gonna have profits for the year. Then we're gonna have balance at the end of the year. So usually with our ordinary share capital, we have an amount at the beginning of the year. Let's just say it's 100 rand. Then they tell us that our retained earnings at the beginning of the year is 50 rand. Our total is gonna be 150. Then they tell us that changes during the year, we had dividends of 25 rand, for example. And our profit for the year was 30 rand. It means that for our retained earnings, our balance at the end of the year will be this 50 minus this 25 plus 30. Right? 50 minus 25 plus 30. How much do we get? We get 55 rand. Sorry, let me have this. We get 55 rand. This is the balance at the end of the year. And then here, let's just assume that there was no additions of, there was no capital contribution, so it remains 100. It means that our totals column here is going to be minus 25,000. Minus 25 rands. Our profit here will just be 30, meaning that our total balance at the end of the year will be 100 plus this 55, which is going to give us 155. This is just a practical example so for you guys to just understand the simple concept of what statement of changes in equity is. Alright, guys. Do you guys understand? Mandiswa says understands. The only thing here is the change in the the only thing bad here is the change in financial statements. What do you mean by that, Gugu? So that I understand what you're saying. Gugu, if you just are able to just unmute yourself, what do you mean by that so that I can interpret what you're saying? Or just type it again, because I don't understand what you're trying to say here. So just elaborate further if you can. Can you please send the document? Okay, that I'll do, right? I'll compile a neat document for you guys. Is there anyone else perhaps with a question? Are you guys still good? Okay. You guys are more than welcome, guys, to ask more questions if you have. Ne? Ask more questions. Share this link with your friends. Send the link to your friends, guys. Tell them that this thing is free. Right? Yeah, let them know. The financial statements have changed from high school. It's difficult to understand, but with practice you'll be fine. Yes. What I recommend is that you try forget what you learned in high school and try cram, not cram, We don't cram in university, guys, but for those that find it tough, just cram the new formats. If you understand the new format, you'll be fine, sure. And there's no way that you should fail or struggle with accounting 1A with me present. No ways. Remofilwe? No, guys, no. Shouldn't fail. You shouldn't fail, right? You just need to communicate with me, consult, then you should be fine. Should be fine, guys. Ne? So Google, just make sure you practice or ask questions if you have any. I will assist. Will assist. Ne? Okay. Are you guys tired? I'm seeing it's 21 minutes past 10. Do you guys think we should call it quits here? Are you guys fine? Or do you guys have more questions? I mean, I can go the whole night, guys. 24/7. Let's go. Asladi, guys. Asladi. But if you guys are okay, if you guys are tired, I just need you guys to make sure that you text on WhatsApp. Just say hi so that you can be sent the YouTube videos and stuff, right? And to make sure that you're not left behind and you understand, right? And then I'll also share the documents in the group and stuff to make sure that you understand what's going on, right? Okay, are you guys okay? Please repeat the explanation for the adjustments of bad dates. My Wi-Fi disconnected while you explaining. Bad dates, ne? When you say our adjustments for bad dates, are you talking about bad dates recovered or if we have more bad dates? If we have more bad dates, we're going to add the bad dates to administrative, distributive, and other expenses, right? We're going to add because we have more bad dates. But if it's bad dates recovered, we are going to reduce that amount. Because we have less bad dates. Do you understand? Okay. I think there's a hand from Karabo. Yes.
So I wanted to ask, do we add it at other incomes or do we minus it on the other expenses?
You can either add it to other incomes or minus it from your distribution, administrative, and other operating expenses, because the effect is the same. If you are adding it to your income, it's going to be equivalent to you deducting from your expenses. So either or. But I would recommend that you can just deduct it from your bad debts itself. So you can deduct it from the distributive, administrative, and other expenses instead of having bad debts recovered, because bad debts recovered is more of a high school concept. You understand?
Yes.
Yeah.
Thank you.
Not a problem. Okay. Are we all good? Fine, guys. Is there anyone with a question? Anyone else? Okay. And I also wanted to ask, would you guys be interested in attending a contact lesson? Maybe we will go through the content. Would you guys want a contact lesson? Okay. Just make sure you text me on WhatsApp, ne? Make sure you text on WhatsApp to the number that sent the link so that we can also organize an online lesson. A contact lesson as well. Okay. But if you guys don't have a question, guys, you are more than welcome to leave. And I hope that you guys enjoyed today's session. But if you have a question or you're still interested or you have random questions to ask, even if it's besides accounting, you're more than welcome to ask, guys, and then I can conversate with you guys. Yes, Taba, is that a hand? Or was that a mistake?
Yes, there is a.
Was that a hand or a mistake?
I want to ask about these, like, all with regard of this course, like how to master it. Like I want to know how to get on the safe side.
What
If you want to,
when you're saying course, are you talking about the module or your degree?
Yeah, the degree, like how to master it.
What degree are you pursuing?
BEg.
Oh, you're doing BEg?
Yeah.
You're not doing BCom?
I'm doing BEg.
Oh, so BEg, you don't do accounting 100, Mos. You do you don't do accounting 1A, you do accounting 100, ne?
Yeah.
Yes, no. Please text me privately, Tabang, because accounting 1A and accounting 100, it's not the same module. Although it's very similar, you guys go into more depth, and I need to send you to the BEg tutor instead of because this is for BCom. So just text me privately saying Tabang doing BEg so that I can add you to the BEg group instead of the BCom one. But for a person that needs help in excelling for BEg, I would just say hard work, consistency, and dedication, because BEg is quite tricky from what I hear from the friends and peers that I have doing it, right? So it needs you to be disciplined, Shem, because hey, at some point you guys even carry trolleys and standards. Hey, it's bad. So I would recommend that practice as often as you can, and make sure you consult with lecturers and your tutors and so forth, right?
Oh, wow.
But I can also send you someone's number that does BEg, and then you can communicate with them, and then you can take it from there. Yeah,
oh yeah.
If God forbid one fails MAA, does that mean you add 1 year? What course are you studying? Are you studying BCom accounting, BCom finance? BCom accounting. I does think it does add another year. I think it blocks something. I think it blocks auditing. Or it blocks it does block something. Yeah, it does add another year. Oh, actually, I don't think it does. I think you can also just do it while doing other modules. You just have extra modules. Yeah. I need to confirm that with you. But if you fail something like accounting, it's gonna block accounting too. If you fail uh, accounting, yeah, I think if you fail accounting, it adds another year. MAA, I'm not too sure. I'd have to check to confirm. But hopefully you don't fail. Hopefully, right? Is it on fire? Okay. Is there perhaps anyone left? Last question. Are we still good? If you guys don't have a question, guys, and you've already texted on WhatsApp, ne, you're more than welcome to exit the call. And thank you so much for joining. And then we will communicate and stay in touch. Hopefully, we can perhaps have a lesson on Thursday or Friday or whenever. We will just communicate the times and so forth if I already have access to your number. All right, guys. But if you do have a question, you're more than welcome to stay and ask it before we leave. Ne? And also, how did you guys find the lesson? Yes, thank you for the lesson. You made accounting easy for me. Now I'm ready to excel. Thank you so much, Tabang. I'm glad I helped you. And please don't forget to text me so that I refer you to the right people.
Thank you.
Thank you, thank you. Okay. Mandiswa, do you perhaps have a question? Let me see. Nzakalo, Bradley, do you perhaps have a question? Okay, if you don't have a question, I'm going to leave the call in the next minute. Nzakalo, Bradley, do you have a question? It seems like there's no question, so I think it's safe for me to leave. It was nice speaking to you, and we will keep in touch.